And I started with bank financing, and I built up that credibility and that track record and experience with several deals of my own through bank financing before I went to any private lenders. And that made it a lot easier.
How can someone my age go about obtaining private investments from real estate, like entrepreneurs and stuff like that?
Yeah, so private lenders are pretty hard, man. Just in general, when you're talking about strangers and people you don't know, people who don't know you, to get them to invest in you and fund your real estate ventures, I think it's going to be pretty hard. And I think that the first line of attack really for you, honestly, should be people you already know. And so it'll be people in your circle, your friends, your relatives. And I'm just going to throw up on the screen just so that everyone can see breakdown of what I'm talking about. So when it comes to private lenders, these are people that need to know, like, and trust you. And this goes across the board, whether you're talking to people unrelated to you, business associates. So I'll give you a little bit of a kind of my background and my take on this. I think about probably like 95% of the real estate that I've purchased since I started investing has been using private lenders. And it's not something that is necessarily easy or natural, but there are a lot of benefits with it that if you can get those private lenders, if you can find those people to invest in you, then it'll allow you to scale. If you're looking to buy rental properties, it'll allow you to scale your rental portfolio a lot quicker. If you're looking to flip houses or do some other endeavors that require financing, then it'll be, the same effect as well. But the biggest obstacle for you right now is that you don't really have any experience. Right? You
Yes,
don't have
sir.
any experience. You don't have a job right now, at least not a job that I'm sure can repay someone hundreds of thousands of dollars
Definitely.
if they were going to lend to you, right? So I think the first line of attack for you, if you want to go this route, and we'll talk about some other routes as well, but just strictly talking about private lenders, I think you need to reach out to friends and family, specifically family first. So anybody, obviously parents, grandparents, aunts and uncles, anybody who is possibly nearing retirement or close to retirement, or they have some funds. What a lot of those people have are various retirement vehicles where the money, or even savings accounts, right? Where the money that they have there might not be earning them the interest that they would like. Maybe they had or do have some interest in real estate, but they don't want to put in the work and the hustle and the time that it takes to actually learn how to do it right, do it successfully and all of that. So the thing you'd be approaching them with would be saying, hey, I'm really interested in real estate. I've been learning about it. I've been studying. I've been on Bigger Pockets. I've done interviews. I've talked to other really experienced real estate investors. I've posted in the forums. And this is what I've learned. I know all the stuff about it. I know the theory. And I also, even though I'm going to be going to school, I'm going to have all this other free time outside of it where I can hustle and put deals together, manage things, take care of things. Whereas they themselves probably don't have that time or inclination, then maybe they don't want to do that, right? So it's almost like you're offering them something that they wouldn't otherwise have without you, and you're getting something in return that you wouldn't otherwise have without them. So I just put a little slide here. This is just like the lender pitch, right? So this is kind of how you would be approaching those people. You'd be leading with your passion because you don't have experience. You'd be talking to them about the benefits to them. And the benefits to them would be primarily the interest rate that they're going to earn on their money. So I'm just going to jump back to the slide that I skipped real quick. So this is a little comparison of interest rates. And let me know if you can see this on the screen. And what you're seeing on the screen here is I just put together 3 different types of financing that you can possibly be looking at, right? You've got bank financing, which right now somewhere in the average of 7.5%. It's been fluctuating 7%, 7.5%, 8%. We're really in a pretty high interest rate environment right now.
Yeah.
Then you've got hard money lenders, which I'm sure you've read about, have heard about at this point.
Mm-hmm.
But hard money lenders are, for those people who might not know who are watching this later on replay, it's people who are in business of being a lender, but they're not the bank lender. Essentially they're like a private lender or a private hedge fund. They're privately owned, but they're in strictly in business. That's how they make their money. That's what they do, right? So with those people, you're looking at interest rates somewhere between 10 to 16%, and there are going to be additional requirements and fees, and they call them points, which are percentages of the loan amount that they're lending you, that you would have to pay them up front, or that they would essentially, take a credit back for. when they're lending you this money. So you're essentially owing them an additional amount when the time comes to fully repay them. And the other thing was with hard money lenders, typically, and there are different variations nowadays with hard money lenders, which some of them do act a little bit more like banks where they amortize their loans. A lot of these hard money lenders are doing interest only, meaning that for a period of several years or a year or several months, the only payments you're making to them are the interest that is accruing every single month. And then at the end, when the time comes to, if it's a flip, you would be selling it. If it's a rental property, you'd be presumably refinancing into a longer term bank financing. At that point, they get paid back the principal. Now, there are hard money lenders these days that act a lot more like banks, and they're pretty much indistinguishable from banks, except they may have some looser criteria for qualification, but they also are more expensive than banks. So there's a pretty wide range of those. But these are the people that are in business to make money through interest rates, through interest payments, through fees that they charge you, things like that, right? Then you have the private lenders, which is the last category, which is the category you're asking me about. And this is a complete, all based on purely agreement. There are no rules. There are no specific criteria or limits that you can be in. You can negotiate something with somebody for 6% interest right now or 5% interest. Most people probably won't go that low because they can get 5% from a CD in the bank. So I put 6 to 12% on here because I think that most rational people who are looking at things like, okay, I don't have to take any risk and I can just put money in a CD and earn 5%, or a high yield savings account, earn 5%. So I'm not going to lend it to this kid at 5% where there's a lot of risk and I could lose my money. Whereas in the other account, it's FDIC insured. And then everything in between, I've seen private lenders, even some of the private lenders that we've worked with, they say, okay, I want to get 12% or 10% is the typical number interest rate for us. The loans that I've been able to get from private lenders for my real estate portfolio have been around 10% historically over the last 4, 5, 6 years that I've been doing that. So those are the people, though, that you can have really flexible terms with. You might have a period of interest only and then start paying principal, amortizing it. You might have it be all interest, right, until it's time to refinance. You might have it be like the term itself, they might lend it to you at interest only for 5 years at 6%, right? Which is an awesome deal if you can get it, if you can find it. But so what I come back to again then with regard to who are these people going to be for you, they are going to be most likely people that really already know you, they like you, and they trust you. And the whole key here is to make sure that you show them what value you would be bringing to them if you're going to go this route. The interest rates are number one. Number two is that you're going to hustle your butt off. You're going to make sure that the deal is successful. You're going to protect their money as much as you would protect your own money in this deal. And that there's a possibility for a long-term repeat relationship. So like a lot of the lenders that I have done business with, they've been with me and my business partner for years now. So some of them started with us in 2018, right? And we're in 2024 already, and they're still rolling their money over and continuously earning that interest from the money they lent to us as we refinance and put their money into use to the next deal and the next deal and the next deal. And so just a little background for you on myself. So I have 160 rental units right now. I have several other buildings under contract. So I'm still kind of in the process of buying. So I'm still expanding. But almost all of them I've purchased with private financing. And usually we're able to refinance the private financing after we turn the property around. We rehab it, put new tenants in, increase the rents, and then we go to a bank, we refinance it, which is this is the essence of the BRRRR strategy. And then we have that pile of money back, and we're obviously talking to our private lender throughout the process, and we're either saying to them, hey, do you want this money? Do you either want to just take it back, or here, we have another deal that we're under contract for. Do you want to finance that? And every single time, almost, since we started this, people wanted to just keep rolling it because it's really easy, very easy money for them. They're making 10% every single month, and they're very happy. So we have people that have lent $300,000 to us, $350,000, $500,000, $800,000, $700,000, $100,000. There's a varying degrees and ranges depending on what the deal is and what their security is going to be in the deal. There's a variety of those options. But the key thing here, though, and this is to come back to your question and your specific situation, I didn't do that when I started. Like, this wasn't my first go-to when I started. Now, when I started, I already had a job, and I started with bank financing, and I built up that credibility and that track record and experience with several deals of my own through bank financing before I went to any private lenders. And that made it a lot easier to get people to say yes and to agree to finance me. Because I think if I went to those people, and most of them are business associates, people that I've either worked with or people that I worked with knew and referred me to, that's how I was able to show them that this is secure, this is serious, and this is something that they're going to make a good return on, and it's going to be fairly safe for them. Because the biggest thing for them is going to be risk with you as an operator, as the investor. If you haven't done any of this before, if you're super young, it's a very difficult hill to climb to convince them to do it. Hey guys, tap or click the screen in the corner for the next house hacking video you should watch. And if you want to go deeper with me and ask me your questions about house hacking or being a rental property owner, join me in my free private house hack mastery group on school.com. I post exclusive content and bonuses in that group, and you can connect with me and other like-minded investors. Also, if you're just getting started and thinking about buying your first house hack, grab your free copy of my house hack success checklist. Both links are in the description below.